Hello traders. The Australian dollar is always interesting to trade, but next week it's going to become even more interesting as the RBA, the Australian Central Bank, is hosting a rate meeting on May 7th. The markets are giving it about a 50% probability that they're going to cut rates by about 25 basis points, and if they indeed go ahead and do that, then we might see some strong moves in the Australian dollar. On the other hand, if they decide not to cut rates and just leave them unchanged, then it's likely that the Australian dollar could gain. Following the latest inflation report, bets have increased for the RBA to cut interest rates as inflation dropped from an annual rate of 1.8% to the current 1.3%. Now, economists do anticipate inflation to pick up to about 1.6 as we have seen a dramatic rise in crude oil prices from December. However, even that figure is going to be way below the 2 to 3% target of the Australian Central Bank. Core inflation as well, which excludes the volatile components of crude oil, is around at 1.6%, which again is way too low and acceptable for the Australian Central Bank. Low inflation is not the only reason to be bearish on the Australian dollar. Their economy has slowed down significantly and it's been like that since mid-2018, probably due to a general economic slowdown in the world and also because of trade wars. There are other reasons as well to be bearish, and that is that house prices in Australia has declined quite sharply in the big cities, and house prices are anticipated to continue to decline over the next year or so. And for places like Sydney, people anticipate that house prices are going to be down with about 20% from their peaks. Now, if house prices indeed continue to drop lower, which is very likely, then it's quite likely that people will consume less as their wealth is deteriorating. As a consequence of the economic situation in Australia, the biggest bank in the region are projecting about 2 rate cuts this year, but not everybody is convinced that we're going to have a rate cut already in May. Instead, some of the banks anticipate that they're just going to lower their GDP forecast and inflation forecast, and that's going to set the tone for a rate cut later this year, most likely the first rate cut being in August. The technical outlook for the Australian dollar versus the USD is also really interesting. We can clearly see here how price has been converging and is trapped in what we call a descending triangle, which is an excellent pattern to trade. Not only that, it's taken a few good months for this pattern to develop, which most of the time tends to lead to decent breakouts. Now, we don't know if they're going to cut interest rates in May. If they don't, I anticipate that the price might seek itself towards the upper end of the range, maybe reaching something like 71 and 71.40. However, if they indeed go ahead and cut interest rates, then it's likely that we could potentially have a break to 69.77. And if that indeed happens, the market could potentially decline to its flash crash low, but the pattern itself here, the descending triangle, suggests that we can decline as low as 66.57. Let's see what happens over the next few days and with the rate meeting on May 7th. But things are looking really interesting for the Australian dollar and the Australian dollar traders. Thank you.